late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, arena so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today we're going to jump into the world of Bitcoin mining again. We're going to do our monthly update. So we do get these monthly production updates from all our Bitcoin miners. Apart from a couple, they have gone away from that monthly production update. So I'll just talk about the ones that are still issuing these. And it just gives us a really good opportunity to kind of compare the fundamental production metrics from month to month, really stay on top of which miners are performing very well, which ones are executing on their growth strategies, and which ones may be underperforming, and then allow us to adjust our positions as such. So we're going to just talk a little bit first about kind of the macro side of things. So we'll jump over here. We're going to just look here. Obviously, if you're not living under a rock, you should know that the US-China trade war has intensified again. So we've seen China hit back with retaliatory tariffs of 84%. Oh no, sorry, 104% and an 84% on all U.S. imported goods here. So China hitting back. We've also seen them say that they are looking at the potential to actually delist U.S.-based stocks off the Chinese stock exchange. So pretty much just this tit-for-tat scenario that we talked about. Lots of volatility, lots of uncertainty still in the markets. It's too early to assume we know where the bottom is, where the trend is going. For now, things are much too uncertain for me to be willing to take major positions in the market. That being said, I have talked about the opportunities to dollar cost average into your high conviction long-term positions. So I have started DCAing my dynamic DCA, so starting to enter into the SPY or just the broad market. So for me, the S&P 500, any ETFs tracking that, I think are good exposure. You get a lot of exposure to the Mag 7 stocks. So those are those big tech stocks that kind of make up a lot of the returns in the S&P. You also do get about 40 to 45% of the revenue from the S&P comes from global sources. So although it is in the US markets, you know, you're not getting 100% US exposure. You're still getting some global exposure. And those Mag 7 stocks are also global companies. So they operate all around the world. So it depends what you want. So if you want to prioritize kind of US equity, then you might go for something like the SPY. If you want to prioritize Canadian equity, you might go for something like the XEQT ETF. And if you want to prioritize kind of world equity, then you might go with one of those ETFs that tracks the more of the world stocks and indices rather than the SPY. It's all up to you. You know, it's within your own risk tolerance. I just kind of accumulate the SPY on a long-term basis for that ease of mind, and I do think a lot of liquidity will still stay in the US markets. Basically, I'm not sure what's going to happen with this trade war, but at the end of the day, China and the US will remain major powers in my opinion, and I don't think, you can diversify if you want, but I don't find a ton of risk in actually just kind of buying into something that tracks the overall market, and I'm doing it on a long-term basis dynamically. So we're down 20% off the highs. Good time to buy historically speaking. If we go down 25%, I'm going to buy a little bit more. If we go down 30%, I'm going to buy a little bit more, and so on until that we see that bottom in the chart, we see the trend reverse to the upside, and then whatever we have left, we can start to look to enter that on a technical standpoint. So basically, my thoughts right now, not buying individual stocks, not buying risky leveraged proxies. So although we're going to talk about the Bitcoin miners, I'm not buying Bitcoin miners right now until the markets have bottomed. They're too risky. Last bear market, they went down 95%, so you need to be able to weather that and take advantage at the lows. So we're just going to continue following the fundamentals, and when we do get to that time where the markets look like they've bottomed and they want to reverse, we're going to go back here, take a look at our document, find the strongest fundamental miners at the cheapest valuations, and then those are the ones we're going to focus on. That's what we've done cycle to cycle. It's what we're going to do going forward. So consistency and execution and patience, those are three really important things to master here. So we're going to get into the monthly updates. No more talking here. Sorry, I got off on a little bit of a tangent there. But I just kind of wanted to emphasize still, don't worry about rushing into the market. You know, if you can, within your risk profile, DCA, build those positions, but also try to build a cash position as well, whether that's through income, whether that's through saving money. So maybe you're cutting some unnecessary spending just to free up additional capital that you can put into the market at a future date. Take advantage of those opportunities when they come. They only come by once in a decade kind of thing. So we had the dot-com, we had the great financial crisis, we had COVID, and now we have this. So these are all been major buying opportunities in the stock market. I don't think this is any different. If the whole system were to collapse, we have a lot bigger problems than what our investments do kind of when you get down to it. So right now, don't take on too much risk, but also be willing to add to those long-term positions that, so if you're in a retirement portfolio, there's nothing wrong with buying a 20% drop in the stock market. Just recognize it could go lower and you need to be able to take advantage of that. So jumping back over to our monthly production updates here, we can see basically the Bitcoin mined per month as well as their efficiency, so how many Bitcoin per exahash of equipment that they have operational. So we see here Marathon, basically all the miners were able to beat their prior month's output here. We see BT, they're no longer issuing monthly production updates. We've seen Wolf transition to this as well, so they kind of say that there's no point in issuing these updates. I kind of argue against that. I really like the real-time fundamental updates behind the production side of things because it allows us to compare these companies from a month-to-month basis, and because this is such a fast-moving environment, we really need to be on top of our assets, on top of the fundamentals, making sure that they're executing on the strategies that we've kind of invested in. So I don't really like to see miners stopping this. It just kind of seems like less transparency. So, but I digress on that too. We still have most of our miners with their monthly updates. So everyone able to kind of beat the prior month here. We see efficiency kind of coming up across the board as well. So Marathon doing well, CleanSpark, Riot. We see Cores here. They beat their prior month, but their efficiency was a little bit lower. Iris Energy also with a little bit lower efficiency. That's because they added a decent amount of hash rate right near the end of the month. So it kind of brings that Bitcoin mined per exahash down a little bit. We see Hive here kind of coming in top of the board in terms of efficiency, also beating their prior month's expectations. There is some bullish news about Hive as well as some other bullish advancements about a few of our other miners. Continue going on there. We see Bitfarms here just beating their prior month by quite a bit here. So we actually see Bitfarms, although their efficiency is kind of a little bit lower than the top ranking miners, they have been able to beat the two prior months consistently. So they're one of the few miners that has been able to do that. We see Hut here, pretty bad efficiency in terms of Bitcoin mined per exahash, but they were able to beat their prior target. They almost doubled their hash rate, so good job for them on that. But we want to see that Bitcoin mined per exahash come up a lot more. We see DMGI here also able to beat, and then same thing coming in with massive efficiency numbers here. So DMGI, the really small scale miner, is actually the most efficient in terms of Bitcoin mined per exahash. So interesting to see that. Obviously, it kind of makes a little bit of sense as you scale these fleets and these companies larger and larger. It is harder to kind of maintain that overall low efficiency. So coming down to our production growth metrics, looking at hash rate. So we see Marathon here increasing their hash rate a little bit from that 53.7 exahash to 54.3. We see CleanSpark coming up from 40.3 to 42.4. So a nice little bump for CleanSpark there. Riot increased theirs a little bit here. Core Scientific, they're still at 18.4, they're 18.1 currently was their operating hash rate for the prior month. So they're down a little bit here, but we are seeing them continue to transition to AI and HPC, so it's kind of expected. Iris Energy here with a big jump up to 37 exahash. That's about a 20% jump in the month. So we're used to seeing this from Iris Energy. You know, they build out their facilities, they have the infrastructure there, and then when they put rigs on, they come on at a pretty substantial rate. So you'll see their hash rate jump by these large instances month over month. So nice big jump here, getting them above Riot and close to CleanSpark here in terms of that 40 plus exahash. We see TeraWolf at 9.7. We see Hive here able at 6.4. There is some advancements there, just talking about their new facility in Paraguay. So we also see they've kind of sold some of their Bitcoin. Previously they did have more, but they did purchase a 200 megawatt facility from Bitfarms recently, and they're actually able to sell their Bitcoin at a higher price. They avoided the downside that we just witnessed, purchased a new facility that was pretty much majorly already built out. So I think it's about 65% done in terms of total construction. That being said, they're expected for the first 100 megawatts to come online kind of in the coming months, quarters, and then ultimately ending up with 200 megawatts by the end of the year, supporting their growth to 25 exahash. So if they achieve that, that's about 4 times hash rate growth from the current level. Given their other valuation metrics, I think Hive is a sleeper right now. They're a nice, efficient company. They've been productive. They're very experienced. They're one of the most experienced, if not the most experienced Bitcoin miner. They've been around the longest. They've been consistent in their strategy. They haven't overpromised and underdelivered, and it's nice to see them really shooting for the moon here, going for that 25 exahash, taking advantage of the opportunity to acquire that facility, selling Bitcoin at a higher price, and investing it into their operation. So good job there. We see Bitfarms here also with a nice jump up. They're at 19, almost 20 exahash now, so 19.5. We see their efficiency also coming down a little bit here, sub 20. So that's actually, should change that to green. I'll do that momentarily, but good job for them. Increase in hash rate, decrease in efficiency, or increase in hash rate and increase in efficiency, sorry. Cypher here maintaining the same hash rate that they previously had, 18.9 in terms of efficiency. Hut here at 9.3, so almost double what they previously had, and bringing their efficiency up as well. So pretty good job from Hut. We see BTBT here. Not really sure what the most up-to-date number is because they didn't provide an update. So that's what I have currently. And then we've got DMGI here coming in at 1.71 exahash here. So just a good job for a lot of miners, especially CleanSpark, Iris Energy, Hut, and Bitfarms did a really good job of bringing hash rate online. So good job there. We kind of see all the other metrics here. So the Bitcoin HODL, how many Bitcoin the company is holding, kind of we see in the top tiers we've got Hut, Riot, CleanSpark, and Marathon. In the middle we've got Hive, Bitfarms, Cypher, Bit Digital, and DMGI. And then at the bottom we've got Wolf, Iris Energy, and Core Scientific with 0 HODL there. Energy under management, that's just how many megawatts they currently have energized and active, and then their pipeline, kind of what they've advertised as their potential future pipeline in terms of energy. We've talked about all these other numbers. They haven't changed really. We're going to come down to our share price metrics because we want to talk about the valuations of these companies. So we see here market cap, and then we've got our enterprise value below it. You can also see a lot of these companies, because of how they're trading, we see that Marathon's enterprise value exceeds their market cap. CleanSpark's enterprise value exceeds their market cap, and you see that with Riot, Core Scientific, Wolf. We see it with Hive, we see it with Bitfarms, we see it with Cypher, we see it with not Bit Digital yet, but we see it with DMGI. So all these companies, the actual company itself, the enterprise value exceeds what the market is valuing them at in terms of market cap. So that kind of presents an undervaluation opportunity. You can really tell with Marathon here, their enterprise value is pretty high compared to their market cap, and a lot of that is because of their Bitcoin HODL value. You can actually see right here, $3,669,000,000 in Bitcoin alone, and that's basically what their market cap is right now. So that tells you the market is valuing Marathon right now at the value of their Bitcoin. That means there's 54 exahash worth of mining business. So that's ASICs, that's data center infrastructure. They have all kinds of different joint venture partnerships, different little pilot programs going on. All of that side of the business is not being valued at anything. So that's pretty crazy to me. The further Marathon goes down, the more of an undervaluation it kind of does represent. It is definitely interesting, but that being said, I want to wait for that bottom in the markets because these are leveraged proxies, so they're going to behave really kind of aggressively in terms of the price action we see in the market. So if the broad market goes down, these miners are going to go down more, and if it goes up, they're going to go up more. But we're not prepared to take the additional risk right now. but recognize the value. So when the confirmation does come, we know who we're focusing on, who is the best, most undervalued miners to acquire when it makes technical sense to do so. So we kind of see that across the board, but the most notable being Marathon and Core Scientific here. So Core Scientific is a pretty interesting one I'm interested in acquiring because they have a concrete AI deal to the tune of billions of dollars. So they've got lots of revenue for over the next kind of 10 to 12 years. So a good opportunity there. We can scroll down. Obviously, we see the Bitcoin HODL value. We see their cash and equivalents here. So coming down to a liquidity to market cap ratio, that's just their value of their Bitcoin plus their last reported cash, and then how much of that compared to their market cap. So you can see Marathon, in terms of liquid assets, they exceed their market cap 110% here. So by 10%, sorry. You see CleanSparks makes up about 63%, Riot is about 83%, and then kind of in the middle of the pack, you know, we've got 40, 30, 39. We see Hive here at 77.8%. BTBT at 64%, and DMGI at 120%. So DMGI and Marathon are both exceeding their market cap in terms of liquidity. And then coming behind them, we've got Riot and we've got Hive and CleanSpark as kind of the middle of the pack. Moving down, we see current ratio. So it's their ability to pay their debt and liabilities with their cash position. We see, oops, sorry about that. We see 4.94 for Marathon. CleanSpark here kind of in the top tier. Core is 6.73. I would kind of mark that as potentially yellow, but they did perform a little bit better. So I kind of put them in the top tier. So Hive, Core Scientific, and CleanSpark's current ratio is better than the peers. For price to book ratio, there's pretty similar valuations across the board, kind of in miners. Riot being valued a little bit less than CleanSpark and Mara in terms of PB ratio. And then we see Hive and DMGI being the most notable undervalued companies in terms of price to book ratio currently. Debt to equity ratio, this is where Mara has a lot more debt here because of all the convertible note offerings that they entered to purchase Bitcoin. That being said, that is factored into kind of the enterprise value, so it is okay for now. CleanSpark debt 32%. We see Riot 19.5. Cores minus 67. So that's kind of as a result of coming out of their Chapter 11 bankruptcy. So continue following that. We see Iris Energy 25%. Wolf here at 200% debt to equity ratio. Hive at 5. Bitfarms at 4. Cypher at 8. BT at 2, DMGI at 17, and HUT at 35. So we obviously want to see a lower number here. That being said, it's okay if they have a higher debt to equity ratio if their current ratio is still high, because that can kind of cover all their short-term liabilities. So we'll continue down to our EV divided by revenue ratio here. Kind of just gauging relative undervaluation against each other. The lower number, the better. So we see CleanSpark, we see Hive, we see Bitfarms, we see HUT, we see Bit Digital, and DMGI all being valued a little bit lower on the EV to revenue market cap ratio, or the EV to revenue ratio. We see Marathon up on the upper end, and Wolf also, and then all the other miners falling in between. Same thing, EV divided by hash rate. The lower the number, the better. Just means more relative undervaluation compared to the peers. So we see CleanSpark here, we see Hive, we see Iris Energy, we've got Bitfarms, and we've got DMGI again. Market cap divided by exahash minus their HODL kind of just gives you a rough idea of how the market is valuing each exahash of the business. So kind of across the board, again, DMGI the clear winner in this category. That being said, DMGI isn't a personal favorite of mine because they're only available in Canada or OTC. There's a lot less liquidity. There's not much institutional investment. The price is kind of boring because of that lack of liquidity. So unfortunately, although the fundamentals remain strong, the liquidity is not there, the hype is not there, so they haven't experienced the same kind of growth that other miners have. So we'll keep that in mind. Now we're going to jump into the charts. So that's just a quick fundamental overview of all the miners. First thing we look at here is our WGMI ETF. We're looking on the weekly chart, try to get an idea. So we were previously riding up this trend line here. We did have that bearish cross that we talked about in all of our other assets. We broke below this trend line, so we pulled our Fibonacci from the cycle low to the high, and then looking at a potential 786 retracement. We also see this order block down here that could provide provide a little bit of a bounce. That being said, it's hard to tell whether we actually get a durable bounce to the upside or if it's just that dead cat bounce. So we do see a lot of resistance up here. There's this sell order block. We've got all our moving averages stacked here. We've got this upsloping trend line, and we've got our weekly VRVP point of control. So there's going to be a lot of resistance around this area here. We could get a bounce from that 786 Fibonacci back up to these levels of resistance, getting rejected, ultimately ending up doing something like this and returning to lower targets before we're able to reverse price action to the upside and try to go on a bit more of a trend. So it's going to really depend what happens. This is that bear market scenario where I think we just continue breaking down. Alternatively, we could just break back above. So that's the other thing. If we put in a bottom, market starts showing some strength and we start getting that uptrending price action, it's going to take a lot, but we're going to have to get above all this resistance and hopes to be able to come up to higher targets. So in that case, we're waiting for those multiple higher highs and low confirmation on the chart. Otherwise, it's not worth the risk. This is that falling knife pattern that I talk about. We can look at our momentum indicators. So we see the bearish momentum losing a little bit of steam here, but it's kind of still hasn't quite bottomed. We still have a little bit to go to more historical lows on the RSI and the MACD in terms of our weekly chart. We'll take a look at the daily chart as well and see what it looks like here. So same thing, we're just looking like still more chopping to do, more consolidation, still neutral-ish setup on the indicators. So in terms of WGMI, we're still waiting. We need strength from Bitcoin and the broad markets if we want miners to do well. We're going to go through our Bitcoin miners here really quick. Looking at Marathon, came down, tagged our accumulation range so far. So if you're DCAing miners, this would be the range I'm looking to buy in. My thoughts, I'm not personally adding at this level. I have Marathon, I have CleanSpark, and I have Iris Energy. Those are my three core miner positions. I continue holding them for now, and I'm going to wait for that confirmation. But you can see we've broken this trend line, so we have done it a little bit before, but we might be due to just consolidate beneath this trend line back in between these two lines here. So Marathon, you're looking at sub $10 is that range that you want to DCA in. Looking at Riot, we see here Riot is in that range, so pretty much same thing. We'll take a look at our momentum indicators. Not looking good, so we see that bearish cross of the MACD right there. We see that our bearish cross of the RSI, and price action also not looking great. So although we're in the accumulation range, you want to see that reversal structure. If you're looking for a confirmed, if you're looking for it to take advantage of a swing trade, definitely wait for confirmation. Otherwise, if you're just DCAing, not a bad time, but we can always go lower with the way the charts look right now. CleanSpark, same thing, top of the accumulation range, so same kind of general thoughts. If you're DCAing, not a bad time. Just recognize we can always go lower. Nobody can really call where the bottom is. I personally, as someone who just focuses on charts, I'd rather wait for that confirmation. I do have positions in the SPY, so I still have exposure to the market, but I have a lot of cash. I'm not rushing to put that cash into the market because as an investor, that has previously been my biggest mistake, was reinvesting profits too early. Too early and too aggressively, and by the time the market got to the actual bottom where I should have been able to take advantage of it substantially more, I didn't have any money left to put in, and then I was ultimately just left sitting there having to wait for the market to move to the upside. So that's what I talk about. You always want to have cash to take advantage of the generational buying opportunities if they come. So CleanSpark, top of the range, but we want to focus on lower targets if you're accumulating and technical confirmation. Same thing for Cypher here. We've entered our 786, so top of the range. Another option for DCAing, but kind of that poor technical structure. It's going to look pretty similar to a lot of assets across the board here. We see Bitfarms coming into this first level of support. In that falling knife structure, again, not too interested. If we break here, the next support I see is down here. That's the bear market lows. If those don't hold, it's really kind of all bets are off. Who knows what's going to happen? So just again waiting for that confirmation. Hive here just breaking a little bit below this accumulation zone, but we see we do have a little bit of support there. So just hopefully can hold on to that. We want to see that move to the upside. It's pretty crazy considering the fundamental value in Hive to see them underperforming like this. I still don't understand why a bigger company hasn't acquired them yet, just given the amount of Bitcoin and their growth pipeline that they have. So we'll continue following that. Ideally, going forward, I'd like to see a bigger company express some interest in acquiring them. We see Hut here, although getting that little pump due to the Trumps buying into them. Look at that, just sold off again. So coming back down, looking like it's about to come to our area of interest. You know, if you're in Hut, it's still holding this upsloping trend line, so looking stronger than some of the other miners. But if we lose this trend line, similar to what we see, we saw it on, I think Cypher here. Yeah, so that's what we had. This trend line was very similar for Hut, and because Cypher, this is when Cypher got that SoftBank investment, you know, it was going to the moon, it was the next big AI stock, and look, ultimately just selling off like everything else, breaking down, rejected by the trend line, and continuation to lower targets. So if we follow Hut, you know, we want to see strength from that trend line, otherwise we could expect the same kind of fate coming down to tag these lower support levels. Looking at Iris Energy here, also has lost this trend line, so aiming for that 420 or lower accumulation target for Iris Energy. Looking at Wolf here, has entered that range. That being said, this trend line as well, same scenario as Hut, although showing good relative strength. You know, if we lose this trend line and we start to resemble the other assets, you know, that's a further bleed to lower targets, and I'm more interested down there than I am interested in buying a falling knife. Core Scientific also almost at that 786. We'll see if it hits there, so that's a good level of support. Previously got a nice bounce, but rejected. We'll see if we can get another bounce from this zone. Otherwise, the next support level, there's a little bit of support here at about 634, but ultimately more of the support coming in down towards $4. So paying attention to that $4 potential target if we get that further breakdown. Bit Digital also was one just riding this kind of channel here, breaking down, back testing, getting rejected, sitting above the accumulation range. So not interested in Bit Digital until we start coming closer to this range, and then it's kind of that DCA territory. Looking at Coinbase here, we see also coming back to that 618. It did lose the lows here, so we can see a slightly lower low on the high time frame, but we are holding our upsloping trend line. We're holding our 618 support for now, so we'll continue watching this. Again, this is kind of just a DCA type play. If you're going to enter it, you know, me personally, not interested. I want to see more strength. I think there's better undervalued companies out there, or better undervalued opportunities. So I don't want to talk about like the fundamentals of the company or whatever. Trying to compare Coinbase to the miners is a little bit of like comparing apples to oranges. So just recognizing we're at that 618. We're still in the downtrending price action, but we're holding support better than some of the others. So if the market gets a bounce, you know, Coinbase could actually be an opportunity because it's shown more relative strength during the downtrend. So keep that in mind. Flipping over to MicroStrategy here, we see pretty much we've got this downtrend breakout that we had. We did manage to hold the lows through here. We're just underneath our 200-day moving average. So if we can get back above that 200-day moving average with that uptrend structure, you know, looking at the higher lows, get above maybe some of our other lower time frame moving averages, and then confirm that higher low here, that's going to be a potential entry for that swing trade to the upside. But that being said, we are still just kind of consolidating at these lows, downtrending on the low time frame, stuck under these three moving averages, and then we've also got this VRVP point of control here. That's why I think when we do get our bounce out of here, there's a lot of resistance, so it's not going to be straight up. Nothing really goes straight up or down. We always get those retests. That's what I talk about, confirmation. That's what we're waiting for. If we take a look at the weekly chart, we can try to get a few ideas of what might be some better ideas of long-term accumulations for MicroStrategy. So we see right here from this breakout point, that might be a good point to pull a Fibonacci retracement and see where it lines up. So coming back down, that 786 initial target, or 618, sorry, and then the 786 down here at 150. So if you're a MicroStrategy bull, you should definitely want to be, sorry, not definitely want to buy. I'd be surprised if, you know, a lot of people were screaming to buy up here at $500, $525. You know, if you're buying up here and not down here at 150, if we come to this level, it's just crazy in my opinion. You know, so obviously we want to buy low and sell high, not the other way around, but MicroStrategy, just from that Fibonacci perspective, we see that 786, worst case scenario. Let's take a look at the prior cycle. We see that we kind of extended up, went into this consolidation, and then broke down below our 200-week moving average. So if something were like that to play out again, watching this 200-week moving average, so this is the potential accumulation zone in terms of kind of a bear market scenario, in my opinion. So looking for that target there. We'll look to DMGI really quick. Also just kind of in that consolidation zone here, but you guys know my thoughts about it. I'm not really interested. There's not enough liquidity, not enough interest in the asset for me to kind of get involved. So that's pretty much it for the miners. There's not a lot going on. Obviously, things are down because the markets are down. These are leveraged proxies on Bitcoin. So when Bitcoin goes down, the miners go down generally, sometimes 2, sometimes 3, even upwards to 5 times as much. So not surprised to see that additional downside volatility. And that's also why I'm not interested in buying more until I get confirmation of that trend reversing. So we're just going to take advantage of the trend. Same thing I've showed you guys many times. We don't need to perfectly time the top or the bottom to make good returns. We just need to time the trend, and we need to execute our strategy when it makes technical sense to do so. When we get those warning signs or we get those confirmation signs of a bottom potentially being in, then we need to really just follow the strategy, leave the emotion behind, pull the trigger, and then wait patiently for our plans to materialize. So thank you so much for watching, guys, and I'll see you in the next one.